Hey guys, Mike here. So, big green day in the stock market. I mean, you saw stocks going up that we hadn't even, God, you hadn't seen those names in a long time, right? Going up double digits. And if you watched my video yesterday, you saw on the charts I showed you when the VIX drops dramatically, it starts coming down like it did Friday and today, you get these massive moves up. So you can make a killing if you just study the VIX. When to get in options, when to buy certain stocks, when to go into leverage or triple leverage ETFs, that kind of stuff. You know, you can make a lot of money doing that. And a lot of people, basically trade off volatility, looking at the VIX and see where it's at. And so that's kind of what you're seeing today, right? The VIX dropped between 8 and 10% as I'm recording this today. Obviously, the QQQ is up almost 6% in 2 trading days. I think the SPY is up around 4% in 2 trading days. And so, they're just moving up big time. And so, the one thing I like to look at and bring you guys is the Wall Street's minds, the ones who run these funds and everything are moving in and out of these trades. And guys I know who have made right calls in the past, right? And what they think about this move. And so the big debate is this the bottom? Or we got more downside? And the biggest one is, are we in a bear market? Or are we in a bull market, right? And that debate is still going on, even though some people have declared this a bear market. Some people still hold a torch for the bull market. And so, always let me know in the comments what you think, what kind of markets you think we're in. And so I'm going to bring you that debate because it's pretty fun to watch. And, each side makes a good case for it. And so it's always good to know because, remember, this is the end of the month, right? And at the end of the month, sometimes, you're closing out the month. You'll have moves like this, to the upside or downside, whichever one. And then when the new month starts, which will be tomorrow, February 1st, all of a sudden things swing a different way. And also when you have big moves like this, you tend to have pullbacks. So we'll see what tomorrow brings because we got a lot of big earnings coming tomorrow, Wednesday and Thursday. Okay, so if you're getting out of this, hit the like, subscribe button for me, guys. Really appreciate it. And let's get right into it. And this is what I was talking about with names we ain't seen in a while. I mean, Arrival, when's the last time you heard that name? Up 24%. Of course, look at where it's at, $3.92. You can go down, you got Neo up 17%. Fiverr's up big time, 16%. Matterport up 16%. Beyond Meat up 14%. Plug Power up 14%. QuantumScape, ain't seen that in a while. Upstart up 14%, and you're looking at who else got Fastly. Good Lord, that thing has been destroyed down to $28, up 12%. Open Doors, has been nuked. It's up 12%. What else we got there? Fisker, ain't heard that name in a while. 11%. Luminar is up 11%. SoFi is up 11%. Roblox is up 11%. And so, of course, all of these beaten down high growth stocks are on fire today. But of course, let's be real. When you're going from 40 and you're down to 10, you move up 90 cents. Of course, it looks like a big move, right? You see that in a lot of those names. But, let's enjoy the green while you can have it because there's been so much red for so many months on these stocks, okay? And so, now to get into the debate of whether or not we're in a bull market, bear market, whether it's a dead cat bounce, or whether or not we're going down lower, here's the guy first that actually... He called for this correction at the end of December, beginning of January. I showed you in a video, and he took a lot of heat for it. But, guess what? He was right. The S&P and the NASDAQ both corrected, and he called for it in the first quarter. We did it in the first month. And so he has a very interesting, surprising view now of what's going to happen in the market.
So we're 6% higher than we were last Monday, and I'm perfectly willing to move past the moniker of the Farmer Jim bottom, because I think where we are now is you have to look forward. And when you bring up yields and when we talk about the Fed, I have to be clear about my position here. I don't think that yields or the Fed are the reason that the market's going to go down. I think those are the reasons why volatility is going to increase. But I strongly believe that you need a catalyst in order to make the market go down. Now, that catalyst could be anything. And let me be clear about this. The bull market is intact. Anybody who's calling for a bear market, I think, is absolutely wrong. And you look at the last time that Russia annexed the Crimea, that year, they did it in February of 2014. The S&P was up 13% that year and 12% on average the next 4 years. The point being is that's not what moves the markets. Profit cycles are what moves the markets. And this profit cycle is still intact. All the Fed is doing is increasing volatility. By itself, it's not going to knock the profit cycle down.
And so, breaking down what he said. So he's saying the bull market is still intact. The profit cycle is what moves markets and all that fun stuff. The thing about Russia is ridiculous because I don't understand how you can compare what happened in 2014 when we were in a massive bull market, zero interest rates, inflation did not exist. And I know that for a fact because I did another video just last week for you guys showing you it was almost zero. Okay, we're a totally different environment. We didn't just come out of a pandemic and a shutdown. I mean, that's totally different, okay? And so I don't even know why he would bring that up. But the other thing is, make sure if you look, did you see what stocks he's long? You didn't see any high growth stocks in there really, right? He has, Google, Facebook, he has Cisco, I was reading these, Apple, AbbVie, what does he have? Berkshire, Disney, General Motors, Goldman Sachs, Home Depot. So understand when he's saying bull market, he's talking about for those types of stocks. He didn't come out and say, oh, all these high growth stocks that don't make any money, that aren't profitable, that have a lot of debt. He didn't say that. Okay, so he's really talking about the SPY more than he is the NASDAQ. And looking at the stocks he's long right there, it kind of lets me know, sure, for those stocks, he thinks there's still a bull market going on. And yes, the interest rates, I actually agree with him about the interest rates though, as far as that shouldn't be what brings down the market in a way, because as we showed, the interest rate hikes, because they're going to be so little, I think, honestly, come on, 0.25, 0.50, it's more, I guess, the sticker shock of it than the actual effect it should have on the market. And again, and he's talking about profit cycles. I say it's news right now that's driving these markets more than anything else right now, it seems like, and uncertainty from the Fed. That's just my humble opinion, but, let me know in the comments what you're at on that one. But, think about it. In our lifetimes, depending on how old you are, besides this year and last year, when did you ever even hear about inflation? Honestly, seriously, there's not a week goes by that my wife and I don't look at each other. If something had happened during the week, we went to go, like the other day, we got a takeout. Or it's takeout when you get wings, fries, football games this weekend, right? So we want to enjoy it, right? You get some wings, you get some French fries, got a kids meal for my son, some shrimp and all that good stuff. And when the lady told me the cost, I was just like, what? Are you kidding me? It's like you're paying almost like fine dining restaurant prices for just basic food now, right? We do our grocery list every week. We sit down, we live on a budget like everybody else, and we look at it, and I'm like, there's no way looking at that list that it costs that much money. And we go through it, and I took my calculator. I said, there's got to be a miss, because we do the pickup at Walmart. We don't go inside. We're lazy. We like to drive up, let them put it in the trunk. And we sit there, and I said, there's no way. And I typed on my calculator, and I was like, dang, they're right on. Can't believe it. It's just crazy. I was like, whoa, So this is, and so he's talking about profits. Every call I've listened to now, as far as looking for forward guidance, what are they talking about? Costs. The cost. Just the labor itself they're paying. The increase in labor is pretty unbelievable. I can't remember a time we've gone there's been this big a raise in just the labor cost, let alone the other input costs. And so I don't know what he's talking about. The profit cycle still intact. For like I said, for the companies he's in, sure. You've seen how much cash Apple has, just on the balance sheet. It's unbelievable. They could buy God knows how many companies right now, and especially these discounts. But it just, for those type of companies, sure, the profit cycle is probably intact. But for a lot of other companies, it's just not with just the increased cost alone right now. And so anyway, that's where I'm at with that one. But now we'll listen to the other side, another guy who's very blunt about it, and where he thinks, because he takes the other side of the coin.
Stocks are in a bear market, period. The indices don't reflect it, but stocks are. Now, they'll bounce here and there, but you've got a massive tightening cycle. And to think that the market's already discounted it before the first hike happens, I think is sort of ridiculous. So, look, you'll get periods of volatility, as we've all said, but there's certain stocks that aren't going to work. And those aren't Cathie Wood stocks.
And let me kind of give you a visual of what he's talking about here. And let me know in the comments if you remember a time that you've been in this market that you've seen this kind of statistic. Not in a crash, in a regular time in the market, okay? Because right now you have 46% of NASDAQ stocks are down at least 50% from their 52-week highs. And then roughly 76% of NASDAQ stocks are down at least 20% from their 52-week highs. And so in a way, it's kind of like you're in two markets, right? For the high growth stocks, you're sitting here in the ones on the NASDAQ or in like a bear market, and it had been since almost like February of last year. And then you got the bull market going on, for the FANG stocks and all these other stocks coming up now, some Dow stocks, value stocks, right? So it's really, you just got this deviation happening. And, the question is, when is that going to end? And that's just how I feel about it. I mean, when I look at that, those numbers, I can't remember unless we were in a crash when I've seen those kind of statistics. And maybe, in the comments you can help us out and let us know when you remember that, because I do not. And so, now looking at the charts to show you the damage that's been done to these indices just so far in the first 31 days of 2022, and what we have to try to fight back up through, because there's a whole lot of resistance levels to try to get back up through. And just starting off on the QQQ here, you can see it got above its 300-day moving average after bouncing off that support level right there multiple times. And you can see all the resistance levels now that were support, now resistance, that it's going to have to fight through to get back above that. And then switching over to the hourly, you can see right here that it's finally got above its 50-day moving average. And again, you see the resistance levels is going to have to get through. I mean, you have big moves up like this, guys. I mean, there's going to be some consolidation, if not pullback at some point in time, if we're truly at a bottom. That's the other debate. And then looking at the S&P, you can see right here, obviously there's the two big green candles. It gets above its 200 moving average. And again, you see all the resistance levels it's going to have to get through. I don't know if it will actually get back in that channel again. That's only about 6% from where it's at right now, but I think that would be huge resistance for it. And looking at the hourly, you can see it's actually claimed its 50-day moving average, almost getting ready to get above the 100, which it might be able to do tomorrow. We'll see. And then moving over to the Russell, which has been the most beaten up indice so far compared to the other three. And I mean, you can see that was major support it had for a long time in that channel right there. And when it broke down, it fell off a cliff. You see all the red candles on the daily right here. And you saw that trend line. It finally broke above that trend line today. And switching over to the hourly, you can see it's reclaimed this 50-day, or trying to reclaim its 50-day moving average and stay above that trend line as a breakout. Matter of fact, let me move that because that's a terrible trend line. I think that right there, yeah, that's better. And so we'll see what happens tomorrow and see if we continue to move up, or is it going to be another volatile day. Find it hard to believe that volatility is just going to go away. I think it's going to be an extremely volatile year, especially for the first quarter. And, because they're getting ready for the rate hike in March and all this other crazy stuff. But, we'll see if this is the bottom. Let me know in the comments what you think. I don't think anybody can predict that either way. But when I see big moves up like this, especially in the names we saw them in, it's like, okay, maybe shorts are covering. Maybe it's just the end of the month. We'll see. And so, let me know what you're doing down in the comments. You still buying dips? Are you kind of waiting off? Or do you think there's more downside to come? And, what year do you think we're in? You think we're in 2015, 2016, which might claim the day that I saw, 2017, 2018, which was the most volatile years on record for the stock market, or what? Okay, so hope you got some out of it. Hit the like, subscribe button if you did, and I'll see you guys tomorrow.